Howdy, Jacob here. Today we're looking at Vertex Pharmaceuticals, company 130 of our high ROIC screener, 104 billion market cap on 93 billion enterprise value, so it looks like a safe balance sheet. Immense growth. I believe they deal with cystic fibrosis. Yep. I looked at this company maybe 2 years ago or so, and I think I got extremely lucky. I started buying at like 210 or something. Um, bought down at 180, but that was super lucky. I didn't. That was before I knew too much about how much to invest. I just knew some of the relative ratios and such. But the company's definitely been doing well. We do see slowed growth. Um, so they're still obviously growing. 10% a year last year is still extremely impressive, but the year-over-year revenue growth has declined from 78% year-over-year in 2015 down to 10% this year. Still super impressive. I'm not downplaying that, especially with margins increasing as much as they have, as high as 43% on the operating side, 87% gross side, with return on invested capital being 20 plus percent. Those are all very impressive. Balance sheet has over 11 billion in cash-like products, and no long-term debt, no short-term debt, 5 billion in total liabilities. So we're very safe on the balance sheet. They even have 2.5 billion in long-term investments. And then on the free cash flow statement, we do see reinvestment by the fact that their capital expenditures have over, 400% growth, because 100%, 300% growth in capital expenditures, but their free cash flow is very expansive. They do have quite a bit of stock-based compensation, and that looks to be pretty much offset by their share repurchases. So I presume we'll see relatively flat shares here, actually going up a little bit, but pretty flat since 2019, which is what we expect, seeing their issuing of shares through stock-based compensation and then the issuing of shares through, or the repurchasing of common stock. The use of cash outside of reinvesting back in themselves is definitely buying back shares. That's probably going to be maybe 20 to 30%. It's not that much. It looks like they're just expanding very heavily on their cash position. I wonder if they're going to do an acquisition soon, do some sort of investment soon, because their cash has gone up absolutely crazy. That's not the best use of capital allocation, obviously, if you're throwing it into a treasury bond or something, 3 month, a year, 2 years, whatever you're making 3 to 6% or whatever it is. It's definitely not a great return on the money. And so we definitely want this company to be reinvesting in themselves at these historical 20% rates of return, and then buying back shares when it's stupendously cheap, which 2021 is, I believe, when they dropped. So hopefully they were buying shares over here at 200 and lower. So if we did a deeper dive, I'd definitely look at that. But you definitely want this company to be reinvesting back in themselves at high rates and then buying back shares when it's stupidly cheap, since they are out of long-term and short-term debt now. There's no need to pay that down. So let's start making some assumptions here. On the revenue growth side, I think I would not be surprised with, it has been going down, but maybe 8%. And then I definitely would want to see when these trademarks and the trademarks for these drugs end to where they will likely be going on to generic. We'll see. But for now, I think I'm pretty comfortable with an 8 and 18 revenue change, P and price free cash flow, 15% return, margins. It's been pretty consistent. Let's do a little bit of a range there. Assume no share change, and we see that the price I'm getting is just pretty far below what it is today. And I mean, I think based on that 29 PE, it's already at very high margins, and that's what I'm projecting out. The growth rate is below the discount rate. It just makes sense that it's projecting a little bit lower than where it's at today. But we can wait. I'm a patient person. I don't know if the person watching this is patient, but I think if you're into buying individual stocks, it's definitely worth it to be patient and understand that things may take a little bit to get to a price that looks attractive to you. But when it does, that's when you gotta really pounce on it. So for now, just waiting. Hope you enjoy the video and have a great rest of your day. Thank you.